So Ebere Okoye, she is our featured speaker. She is pretty much, I think she represents probably 80% of our REIA membership as our wealth building CPA. She has a team of professionals and their experience in all things accounting, real estate. She really gets things in order. She also does presentations, especially helping real estate investors, not just real estate investors, but also business owners, small business owners, understand whether or not their LLCs are toxic or not, right? She is familiar with helping you analyze, whether or not, how you can move your 401k, IRA monies in, if you should have a solo 401k or although a Roth 401k and all those kinds of things. These are some of the things that people ask every day. But her service, her knowledge, and her capability is why she has been my CPA and why I recommend her to my personal coaching clients as well as my REIA members, because she really has a plan that fits where you are. And that's one of the things that you don't really see in everyday accountings, right? So the CPAs or accountants, what's the difference? The difference is one represents you and go hard in tax court, and the other prepares your taxes. She is an all-around tax planning strategist as well as a CPA. And when you are her client, she comes on board like your team member, your board advisor. When I have questions about if I should purchase this or if I should let that LLC go or why am I paying this much taxes on this, she is the person that I go to tell me whether I should close the LLC down, whether I should get an S Corp or what have you. She really is the attorney's CPA, and she is also the real estate investor's CPA. So without further ado, I do want to bring up my friend, my colleague, and my personal CPA, Miss Ebere Okoye, the wealth building CPA. Welcome, Ebere.
Thank you, Teresa. Hi, everybody. How are you doing? Because I'm sharing my screen. Can you hear me?
We see it. Yes, we see it and hear you.
Okay. All right, great. So because I'm sharing my screen, I will not be able to see you, but I'll try to get through the presentation as quickly as possible so that we can open up for questions. So of course I am the special guest. I'm a CPA and active real estate investor and the founder of the Wealth Building CPA. I own real estate across 5 states in the Eastern Coast, and I've helped over 5,000 people like you prepare taxes online. My joy comes from helping clients, friends, and associates become free of financial stress. And for those of you that are Christians, I love the quote, the fourth man in the furnace. So we act as the fourth man in your financial furnace to help bring you out and put you on the right path. I've been in the industry for so many years. I'm familiar with money saving strategies, which I love to implement all of the time, combined with my 23 years of experience as a CPA tax strategist and 18 years experience as a real estate investor and business owner. With this combination, it's always a great pleasure for me to empower you to make your financial life so much more profitable. This is my family, married with a girl. She is now attending college at Duke University, and then I have 2 boys. They're not twins, they're 3.5 years apart. But, okay, so now we're gonna get into it. We are gonna look at the wealth building plan, the different stages. I know that really what we're talking about is wealth building after the pandemic. So I thought that the best way to do the format is to go through the different stages. I do this presentation every time. Some people are going to be hearing it for the umpteenth time, but this time around, I will focus on areas where we need to pay attention post-pandemic, what it means, what the stage means now that we are in an active, pandemic and surviving it as a business owner. The Wealth Building Program is a 12-month training program, and it takes you step by step, the steps you're required to run a successful and efficient real estate business. My team, we've developed this system after years of working with business owners and real estate investors on how best to use their professional skills, passion, and experience to pursue their entrepreneurial dreams. So this program focuses on tax planning, tax preparation, entity structuring, business meetings, etc., and it runs for 12 months. So the first thing that we're going to look at is the financial needs analysis. Most people overlook this stage, but this is where you really get clear about what you want in life, your financial finish line, your retirement goals. Why are you doing this? You know, for some people, they want to replace their active work. You know, you're working full time somewhere now and you'd rather start work full time in real estate. For the rest of us, we have other things that we love to do. I love being a CPA. I love being a CPA to real estate investors, but I love doing real estate. So real estate for me does not replace my regular work. It's a side thing that helps me build passive investment so that ultimately I will become financially free. I don't necessarily see myself ever retiring. I just don't like that concept of retiring. I love the concept of having more time to really fulfill my passion and dreams. So what we're going to look at now is the post-pandemic analysis. So which industries were pandemic proof? So I don't know how to do this. We'll try it out. If it doesn't work, then I'll just go through the presentation. But on your chat, can you let me know which industries were recession proof? Let me go to the chat and see. If you were not impacted by this pandemic, please tell me which industry you're in. Okay, food services, web development, tech. X-ray, security, nursing, TSA, government, healthcare, real estate, home improvement, teaching. Teaching was not impacted. I thought that teaching, you had to pivot. So let's see who wrote down teaching. Tara, can you tell us more about the teaching when you're saying teaching? Because I thought that teachers had to learn now how to pivot online. Are you talking about those who were already in online teaching? Publishing, healthcare, government, garbage removal, funeral. Lorraine, I thought funerals were impacted too because not a lot of people are coming out. Are you saying that doesn't impact the services that you guys offer? All right, state government, unemployment, office, aviation, real estate, government. Okay, so while we wait for Lorraine and I forgot her name, the teacher Tara on teaching to let us know how they were not impacted. What industries were impacted by the pandemic? If you know off the top of your head, you can write, put it in the chat.
And for Lorraine and Tara, you just have to unmute yourself to speak.
Yeah, so I'm saying that the funeral industry, I think they were positively impacted by the pandemic. I'm not in the funeral industry myself. I'm just saying I think that industry they have seen an increase in business because of
because of the people that passed. Okay.
Yeah.
Okay. All right. So all right, got it. That makes sense. All right. So airline, travel, architecture, real estate, big box stores, hotels, social services, absolutely, restaurants, retail, all these were impacted. So one of the questions that we have to ask ourselves, I don't necessarily want us to just look at the industries that are impacted by this pandemic. We need to look at overall which industries were impacted. Even when you have a recession, what industries are impacted by the recession? And the reason why this is important is because you need to learn how to do sales and pitching on a service and product, and then quickly reestablish yourself with the right support system. Because it's possible for you to think, oh, I'm always going to be a teacher. Oh, I'm always going to be in the airline industry. Oh, I'm always going to work in the restaurant. And look, something like this happens. And then I know 10 years ago, when we had the recession from the real estate, a lot of people in real estate were impacted. So the question is, I don't know how many of you have read the book, Who Moved My Cheese? If your cheese is moving, do you know how to move and go find cheese somewhere else? What are the skill sets that you need to go find cheese somewhere else? This is the reason why I admire I admire Teresa so much. I admire James so much. You can't just sit still and be in one place. You have to keep reinventing yourself. You know, you have to learn different things. And sales and pitching is huge, because once you learn that skill, it can really port to any industry that you want to port to. So it's very, very critical that in the post-pandemic, you're not just looking at industries that were impacted by the pandemic or that were pandemic-proof. You also want to ask yourself where another recession or another catastrophe were to happen that wipes out your industry, because you could be assuming that your industry may never be wiped out, and that's not true. What if something happens and your industry is wiped out? How do you quickly pivot? You know, my husband and I were talking about, you know, let's look at the 1990s. What jobs were available in the 1990s that are no longer there today? You know, telephone operators, you know, the phone book, you know, those kinds of things were available. Typists, people that knew how to type on a typewriter. All those industries, those are gone. They're gone. Barely how many years later, we don't have those anymore, 30 years later. So what's going to happen in the next 30 years, 10 years, 20 years? So part of your needs analysis is that you need to have enough skill set so that you can quickly pivot if a crisis happens in your job. And that's why we're saying learning how to do sales and pitching, and also reestablishing the right support system. You may not know what to do, but you know where to go and get help. So when we're talking about financial needs analysis, is really getting crystal clear about what you want out of life. How are you going to make the money? How much money do you need? But even more so now in the post-pandemic, well, actually, we're getting back into it. We're getting back into the thick of it. Maryland got shut down today. You need to ask yourself whether or not the skill sets you have can work in another industry. If it doesn't, it helps to really start investing the time now to quickly retool and pivot. How did your emergency account and savings help during this period? How did your emergency account and savings help during this period? This is also a critical question that you need to ask yourself. Did you find yourself drawing into your emergency account and savings? Did you not even have any? Were you anxious? Were you worried? Were you scared about your job? Did you not know what was going to happen? I know that for those of us that are in New York, this is even a bigger issue. People are moving out of New York. You know, New York was hit very hard. How did that impact you? Was that really worrisome? Now is the time to start thinking, if this were to happen again or something similar. You know, when 9/11 happened, it happened in New York. The pandemic hit, New York was worse hit. What else could happen that would impact you? And do you have enough savings to be able, what if you have to quickly relocate and leave New York and maybe head to the South? Are you prepared? Do you have that kind of money? Do you even have relationships? Do you have the right support system to be able to make those decisions? So those are the kind of questions that you need to be asking yourself, you know, with this pandemic. The next thing that we're looking at is tax planning and preparation. During this stage, we look at your last 3 years of tax returns. We review them, whether there are accuracies, any inconsistencies, any audit flags, any overlooked deductions. And an important part of reduction planning is not wasting deductions or making certain elections to take advantage of unused deductions in the future. We also prepare your individual and business tax returns for the tax year. So with the post-pandemic analysis, we're looking at, for those of us that got the PPP loan, are they going to forgive this loan? If they don't forgive the loan that is under $150,000, or if it's not an automatic forgiveness, are they going to require that what you paid with the PPP loan will not be included in expenses? So if you use it for payroll or for rent or utilities, they're saying that those expenses are not going to be included, which technically means you're going to have a higher tax liability. Did you collect unemployment? How is that going to be taxed? There's the IRA distribution where you're allowed to take money out without the early withdrawal penalty. So these are the things that you're going to start looking at now, November, December, to see how those things are going to impact your taxes come next year. The next thing that we're looking at is entity structuring, using of your legal entity in order to have asset protection and tax mitigation. now that we're dealing with the post-pandemic analysis is, you need to look at becoming an entrepreneur. Make sure that you are recession-proof and have the ability to adapt, pivot, and evolve. And having the right entity can make a lot of difference. There's a lot of grants that came out this period, a lot of grants that were made available, and the people that were able to take advantage of it were people who already had. They said your entity had to be set up before February of 2020. If you didn't already have an entity set up, you could not take advantage of a lot of the grants that were available. So are you an entrepreneur? Have you set up your entity right? Are you doing your bookkeeping right? All those things are critical, because if there's going to be help that is offered, or decisions need to be made, or there are contracts to be awarded, they're probably going to be looking at people who have legal entities already set up, not that you're trying to set it up once you find out, that there's some kind of economic crisis and the government is trying to help. So looking at some costly entity structure mistakes, I'm going to skip this for now. If you guys want the slides, you can request the slides from Teresa. The next thing that we look at is business registration. This is critical. It doesn't have anything to do with the pandemic, but I think it's important anyway. When you're setting up your entity, just make sure that you do not use your home address. On the form that you use a mail forwarding address, make sure you don't use yourself as a resident agent. You can use companies like Incorp, because the whole goal of setting up your entity is to protect yourself. So if you're putting your home address and all that information out there in the public, you really haven't protected yourself. Once you have the entity formed, please make sure that you have an EIN number from the IRS. With that, you're able to open up your bank account, you're able to draft your operating agreement, and then you want to do cash sweep. Cash sweep pretty much means that you take a look at all of the expenses that you incurred prior to opening up the business account, and then move those onto the books of the business. That way, if an audit comes up, you're presenting the business bank statement, you're showing that this was ordinary and necessary. You're not having to present personal bank statements, credit card statements. All business activities should be on the business bank account. All right, business analysis meetings. During these meetings, where like an alternative board, kind of what you're doing now, we offer it for our clients. We get crystal clear on where your business is doing today. So post-pandemic analysis, have you met with all of your wealth building coaches? For those that are in the wealth building program, right now we're looking at the year-end tax planning. This is the time that we're evaluating everything that happened this year to figure out what our next steps. I've been having series of meetings right after 10/15 deadline with our clients that were significantly impacted to figure out what are next steps, what are things that they need to do. So if you don't have, you're not part of a coaching program, you're not part of having coaches around, this is the time to put together a mastermind coaching program, alternative board, so that you can really evaluate your business, see how it was impacted by the pandemic, and then to help you make decisions about the right way to pivot. Stage 6, investment property purchasing. I'm not going to get much into that because that's really why you're here with Teresa. But with the post-pandemic, have you committed to an investment plan? This is actually the time that you need to make a decision to actually have an investment plan, because you know that regular work may not always be reliable. I'm sure a lot of people did not know March 10th that they were going to be in the unemployment line come April 1st. If you have an investment plan and you're used to investing, purchasing properties, investing in stocks, having your own business, you have multiple streams of income. If there's a pandemic, recession, financial crisis, you're not just relying with a day-to-day job. You have other places that are going to help sustain you. So the most important decision you're making with investment property purchasing is, did you commit to an investment plan? All right, retirement planning. I don't have much to say here. It's just that the CARE Act has removed the 10% penalty on early withdrawal from retirement accounts, as long as it's coronavirus related. Do you have a retirement account? If you've left your job and you have some funds in a retirement account, did you put it in a self-directed retirement account so that you're able to invest in real estate with those funds. Those are the kind of things that you need to be looking at right now. And year-end tax planning, this is really what we're working on right now. I tell people that April 15th is your tax filing deadline, but December 31st is your tax savings deadline. So whatever you don't put in place between now and December 31st, you're pretty much just reporting. So these are the things that we're looking at right now. And then I'll just go through really quickly the different things that we're looking at. The recovery rebate, in terms of the tax impact of the rebate. If your income, I'm just looking at the second paragraph. If a taxpayer receives a rebate, but their 2020 income makes them ineligible for the rebate, there's no requirement for the taxpayer to repay the rebate. On the other hand, if you're an individual was not eligible for the rebate based on their 2018-2019 income, but they would be eligible based on their 2020 income, they can determine that rebate as a credit on their 2020 tax return. So if you didn't get a rebate, it's not too late. When you file your 2020, the real calculation will be done. And if it's determined that you shouldn't have gotten the rebate, they're not going to ask you for that money back. There's charitable contribution provisions that are now available. You can now claim an above the line deduction up to $300, and then you can take deductions up to 100% of your adjusted gross income. So this is an opportunity. If you're somebody who is a giver, this might be the year that you give a lot more, knowing that this year you can exclude all of it from your gross income. And then student loan repayments, you're able to exclude up to $5,250 from income from student loan repayments made by an employer after March 21st and on or before December. So it's subject to the same restrictions that the Educational Assistance Program. All right, second thing, this is more for the businesses. Just knowing what the changes are, the net operating losses, you can now carry them back. The limitation on the business interest has been modified. Qualified improvement is now eligible for 100% bonus deductions, and the employer portion of Social Security taxes are now deferred. So this is pretty much it. I'm going to stop sharing my screen. And then now I am going to open it up for questions. So you can either speak or you can type if you have any questions. And we'll just answer questions until we wrap up. Teresa, how much more time do we have?
We go to 8:30.
Okay. So we have about 25 minutes. I have 25 minutes to answer any questions that you guys have.
And if you're going to be speaking, you have to remember to unmute yourself. Once you ask the question, mute yourself back so we don't have the background noise, please. Thanks a lot. And I'll monitor the chat.
And don't give a qualifier, just ask your question so that she can answer it so we can give everyone else a chance to answer. So get in, ask your question. We don't need background, we just want the question.
All right, so somebody is asking how they can get the document. So Teresa, you're going to make it available to them, right?
As long as there's members, if they're members, I will make it available to them.
Okay.
And I have a quick question. Where do you go to get addresses again outside of your personal to use for your business?
Mail forwarding. There are several mail forwarding companies. That's what it's called. So when it comes to registering your business, there's two important things that you need to know: mail forwarding address and resident agent. Resident agent services, you can use InCorp. There are several out there, charge $89, $100 a year. But when you're looking for an address outside of your home, it's called a mail forwarding service. I know that mailboxes, etc. But if you just type in mail forwarding services in your state, you would be able to locate them. You know, they charge anywhere from $100 to $250 a year. LLCs versus S Corps. So S Corp is not an entity. It is an election that you make with the IRS. So you can either file an election as an LLC to be an S Corp or an election as a C Corp to become an S Corp. With an S Corp, you pay yourself a salary. You have to put yourself on salary. The IRS is expecting reasonable compensation. With an LLC, you just get guaranteed payments. And, you know, for especially for those that are in a cyclical business, it's much better to have like a multi-member LLC than an S corp. But if you're in a stable business, then the S corp route is usually better. That way you're able to have a consistent salary. Also, I've heard that being an S corp is better for financing, because when you pay yourself a W-2, they treat it a lot differently than income from your business. But, you know, those of us that are in business, we've still been able to get financing. You just have to jump through a lot more hoops. All right, so, okay. Entity services, we're going to be added to the member portal in the coming weeks. All right, any other questions?
I do have one question regarding LLCs. So if it's currently, it initially set up as an LLC single entity, single member entity, just for the purposes of liability purposes for a building. But if I was interested in trying to start making investments or purchasing properties or notes or something like that within that LLC, would I be able to do it as that single member entity classification, or would I have to convert it into an S corp or a partnership or something?
No, you can do it in the single member LLC. There's also factors that you have to consider. Depending on the kind of property that you're purchasing, some lenders will not lend to an LLC. You have to first purchase it in your name and then transfer it. Just keeping in mind with the due on sale clause, although if you're making the payments, they never call it. But just keep it, sometimes the LLC can act as the property management entity, because banks will not finance an LLC, but you can absolutely purchase the properties in a single member LLC. It doesn't necessarily need to be a multi-member or an S corp.
Or maybe I miss. So it's a single member LLC, but it was classified for tax purposes as a disregarded entity.
Yeah, single member LLCs are disregarded for tax purposes, meaning that they don't file their own tax returns. They would be filed on the individual tax return. If it's for a business, it will be filed on a Schedule C. If it's for a rental property, it will be filed on a Schedule E. Now, I'm glad you brought that up. Schedule Cs and Schedule Es tend to be audited a lot more than any other tax form. So it's just to keep that in mind. If you start generating significant income, you definitely want to restructure. And now in terms of the restructuring, it doesn't take that much. It's just a one-page resolution to go from a single member to a multi-member. But to go from a single member to an S corp, or multi-member to an S corp, or C corp to an S corp, it's an election that has to be filed with the IRS.
Okay, but I wouldn't have to do publication over again.
No.
Okay.
No.
Okay, great.
This is an internal thing, yes.
Okay, thank you.
You're welcome.
Do we have any more questions? This is one of the best times to get your questions answered, that you may or may not know, with a CPA and an attorney that's on the line, that you actually paid $35 for if you were a guest. I think you should take advantage of that. So I'll ask the question that I've been asked, Ebere, but I'm not gonna ask questions that, if they don't have any questions, I'm gonna let you go early, right? You know how we do. The question
that will be wonderful. You know how I will.
I understand, but we're not going to do this pause thing. So one of the questions that I get asked a lot is, if they're buying real estate courses and coaching and things of that sort, and they want to write stuff off, can you please give people, some real knowledge about how and when that's done? And it's not always done if you ain't generating no income. Can you please talk about that?
Yeah, so investment in education is not deductible. So that's the first principle that we need to understand. Investment in education to improve your skills is not deductible. However, if you have a business, and most of our clients, we give them the real estate operating agreement. In the real estate operating agreement, we state that as a managing member of your entity, you are required to engage in educational courses that would help you do the best that you can as the managing member of the LLC. So in that case, that expense becomes reimbursable. If it's reimbursable by the partnership, then the partnership is able to claim it. However, it is claimed as startup cost or as an intangible that is spread out over time. And we look at something called economic performance, which is how long is it going to take for you to receive the benefit? If you're purchasing a property, rehabbing it, renting it, yeah, within 2-3 years, you'll see that you've gotten the benefit. But if you really are not generating any income, it's going to be hard to justify that you've gotten the benefit out of investing in the property. So it just remains startup cost. And sometimes it starts to become, what do I call it, the law of diminishing returns, because you're spending money, but you're not really generating money. The goal of every business is to make money, not spend money. So it's really important that you understand that the reason why you're spending the money is to make money. And then when you bring that on the tax side, if you're not making any money, it has to be amortized as an intangible over a period of time. So Paul is asking, is the use of 1031 exchanges going away? No, not anytime soon. Paul, is there something that you saw that gave you that impression? Now, let me confess, I just tuned out of everything. Maybe something came out yesterday and I don't know about it. But not necessarily. 1031 exchanges are still are available. It's possible that, with the new government, things can always be repealed or pulled back, or, different things like that. So I don't want to put it beyond the realm of possibility. But at this point in time, you can still absolutely do 1031 exchange. That doing the 1031 exchange is no different from it's different, but it's the same effect of doing the opportunity zone, purchasing properties in a qualified opportunity zone. You are able to defer your capital gains if you're purchasing an opportunity zone, and you have 180 days to make the purchase. It's not like the 1031 where you have 45 days to identify the property. Okay, Levon said, I have an LLC with several members who are no longer active. What should I do in that instance with the LLC? Do I need to start a new one? You could start a new one, or you just file a resolution to remove them as members, and then now you 100% own it. So one-page resolution, all of them sign that they're leaving the LLC and they're transferring their interest to you, and you can still continue to use that LLC. If that's not going to work, then yeah, you just shut it down and start a new one. Is it necessary to form an LLC if I want to purchase notes? Yes, asset protection, because you definitely want to keep your assets separately. You are going to own a note, and note is an asset. Anybody can come against that asset. So yes, it does make sense that you have an LLC for notes. Do we have you said we had an attorney on here. I could also give him time to respond to some of these LLC questions, or I can keep going.
I think Hector is immigrant. Hector, what type of law do you practice, Hector? Is he still here?
I'm on mute. Yeah, I do sales and trading, more investment banking. I used to do real estate, but I haven't done it in a while.
Okay.
Okay. So do you have any responses, or do you want me to keep going?
As far as the LLC question, I mean, I think Lavone knows where I stand. We spoke about that. Everything that you hold as an asset, as Ebere said, needs to be put into an entity structure. You need to speak with a CPA to find out, what you're doing so that you have your tax bases right, because legally you can farm anywhere, anything, whatever the case may be, but it really is your tax that you got to pay attention to. So it's best if you have on your wealth building team your attorney and your CPA. If you're making a decision to do something, you really need to kind of speak to both, put them on the call. That's the beauty of having a wealth building CPA like Ebere, because she acts as your advisor, and she will get on a call with your team member, and they can, talk it out to find out what would be the best move for you to make. For that. That's why I don't recommend LegalZoom and things of that sort, because if you are forming things and you just reading on the internet, or you're just reading a book, you really don't know how that applies to your individual situation. So you really can't, when you're building your wealth and creating a wealth building plan, you can't nickel and dime the process. You really need to pay attention to what it is that you actually need, so that you can get the right advice that you need to be getting, and you need to have somebody on your team that's protecting your interests. So that's what I'll say about that. So whatever you decide that you want to do, make sure you just speak with a professional in that area and let them know everything. Don't try to hide, what you're doing or whatever and think it's going to be favorable to you, because if they don't have all the information, they can't advise you. That's the only thing I'll say about, entity formations and anything else when it comes to your business.
Mr. Okoye, I have a quick question. Do you charge a set price to help form an LLC, or does it vary, the price vary by customer and client situation?
Well, for you, it's going to vary. Look at your pretty face. It might be $1,000. Let's see. No, I'm kidding.
I think Daniel should be $5,000. Daniel is a problem. He's a troublemaker.
Look at that. $5,000.
I can't get a discount.
$1 discount, $49.99. No, it's $5.99 is what we charge to set up entities. What makes the difference in your cost is going to be the state you're located. If you're doing New York, you have that additional cost of publishing. And then also if you're going to expedite, and then who you're using as your resident agent and mail forward. But that service fee is the same. It's $5.99. But what varies from client to client is the state where they're forming it at. Fee is the expedite fee. Publishing if you're in New York, and then the resident agent fee and the business, the use of business address. All right, so Stanley said you can make a valid argument for all those businesses. How do you know what's right for you? So whenever we form an entity for a client, we look at 3 things. 1, the tax benefits. 2, the asset protection benefits. And 3, the ease of compliance. Tax benefits. If the tax benefits depend on what kind of real estate strategy you're pursuing. The tax benefits that are of concern to a buy and hold investor is not the same that's a concern for a rehabber or a wholesaler or somebody who does notes of commercial investing or self-storage. All those things determine, or if you're doing sandwich leases. So you first start out with your real estate strategy. The real estate strategy should determine what kind of tax exposure you have. The kind of tax exposure you have determines the kind of entity that you need to form. So that's one. Second thing that we look at, the section, again, your real estate strategy determines what kind of risk that you're taking. A buy and hold investor, their risk is somebody having access to the equity that they have in the property. But somebody that's a wholesaler does not have that issue because they're not holding on to any assets. The only asset that they have is cash. For somebody that's doing notes, your exposure, it's not necessarily with the property, is going to be having access to those notes. So the same thing, you look at your real estate strategy, look at what kind of risk of creditors taking over your asset you have. And then you look at which entity gives you the best protection. That ease of compliance is a general thing. How much does it cost to maintain an LLC versus a C Corp versus an S Corp? When you look at it, because sometimes going the S Corp route, C Corp route might be the best, but when you realize that you got to do all the board of directors minutes and meet them for salary and all that, those are compliance costs. The cost of having to file taxes every year if you have a separate entity that's not a disregarded entity. So again, you look at how much it's going to cost you to maintain it every year and then determine. So that's why sometimes we start some people out with a single member LLC, and then they can switch and upgrade later on as their business continues to grow. All right, another question is note invest in LLC versus trust. It doesn't really matter whether it's notes or another kind of strategy. The question is LLC better versus trust? It's to understand that each plays a different role. LLC is limited liability. It limits your liability to what you have invested in the LLC. A trust does not have limited liability. On the other hand, limited liability may not necessarily give you privacy, but a trust will give you privacy and also help you with estate planning. So both play their own roles, and then you have to decide which one is the best one to use or how to go about it. We have some clients that set up LLC, the beneficiary owner of the trust, or you can set up an LLC and then have the trust as the owner as the member or a managing member or a passive member in the trust. So you can use both, or you can just use one. At the end of the day, make sure that you're not just looking at LLC versus trust, but also go back and look at your strategy and then figure out. But LLC and trust, you really can't put them on the same footing because they serve different purposes. All right, I'm doing notes, and my LLC is set up outside New York. I'm not presently doing business in New York. Am I all right for now? Yeah, you're out. You're okay for now. Let me read this again. I'm doing notes, and my LLC is set up outside New York. I'm not presently doing business in New York. So the LLC is outside New York, but you're not doing. Where are you doing the notes? Where are you purchasing the notes? Is it all over? Okay, Michigan. So that's something that you may want to consider, whether it makes sense to register the New York as a foreign entity in Michigan. Always remember that when it comes to entities, your whole goal is asset protection. So you want to register an entity where you're doing business. If you're going to be sued, you're going to be sued in the state where you're doing business. So if you have notes in Michigan, it's not going to be the New York law. The New York laws are not going to apply. So if your LLC is set up outside of New York, is set up in Michigan, and you're doing business in Michigan, then you're fine. If you're not presently doing any business in New York, you don't necessarily have to register in New York yet. So you should be okay. But also just keep in mind that you want your LLC to be in the state where you're doing business. When it comes time for tax filing, you are going to file taxes in both Michigan and New York. Do I have any recommendation?
Let me
Go ahead.
Let me answer, just add to that, Ebere. Just know that you have to describe, and Stanley, I know you're smiling because you know I'm getting ready to get on you like ASAP. What do you define as doing business? If you're holding calls in New York regarding your Michigan business, you are doing business in the state of New York. If you are networking on behalf of your Michigan entity and doing business in New York, and that networking session happens to be in New York, you have touched New York, you are doing business in New York. And you will not be, you will be held liable as or breaking the corporate veil or what have you, and you could be brought, a law can apply, New York law can apply to you in New York. So I just want to make sure that we are clear about what doing business means. Just because you don't have assets in New York and you're not investing in New York and you're not whatever in New York, if you're networking in New York, you're taking phone calls in New York, you're doing business and conducting business on behalf of your entity in New York, whether you have Delaware, Michigan, Wisconsin, Wyoming, you are still doing business in New York. And all I'm telling you, like I tell you guys all the time, make sure I'm not the attorney on the other side because you're going down. I'm going to get you.
And New York will touch you with a bill.
So basically what she's saying is that you have some, even though you're doing business in Michigan, you have some kind of nexus in New York because you're engaging in all of the activities in New York. So if you look at it, nexus is really about 3 factors: sales. And so right now we're saying that your sales is taking place in Michigan. Payroll is kind of taking place in New York because you are physically located in New York. So payroll means income that you're getting from the business. And then property, where is your property located? Because you are renting, if you own a property or if you're renting in New York, because in order for you to do business in New York, you have to be in some kind of physical space. So where that property is located, if you're in the physical space in New York, then that constitutes nexus. So, Teresa, in that case, your recommendation is that the entity should be set up as a foreign entity in New York, right?
Correct. Yes.
Okay.
Or set up a management, a separate entity as the managing entity that manages all of that. Something has to be in New York because New York is going to grab them, and like James said, they're gonna send you the bill.
May I ask a question?
Okay. Okay, go ahead, Susan. I have 2 questions on the chat, but you can go ahead.
I can wait. I'm sorry, I can't type. I'm driving.
Okay, go ahead. Go ahead. We'll get you.
Okay, regarding what Teresa just said, setting up an entity in New York, then Teresa, would you be okay with just setting up a C Corp in New York as the management company? Would that satisfy the criteria? And the C Corp, and you don't hold, the C Corp doesn't hold any assets. The C Corp is only, the New York C Corp doesn't hold assets. It is only the management company. Would that be satisfactory?
Yes, that would be satisfactory, but I don't know whether it be a C Corp or whatever. That's a very question, but definitely how you structured it, as long as the entity is a managing entity, because you can actually now conduct business on behalf of that other entity in another state, that absolutely would justify what I'm talking about.
Thank you.
Now, tax-wise, that's an Ebere question, but
Yeah,
but all the other legally, that's okay.
yeah. I'm not asking from a tax perspective. I'm asking from the perspective
Legal,
of.
yes, correct.
Yes. All right, thank you.
All right. Any recommendations concerning bookkeeping? Since most of them are using QuickBooks, some use Quicken, some use an Excel spreadsheet. Use what works for you as long as you're keeping track. A lot of people lost out this year from all the grants and help that was available simply because they didn't have their books up to date. As concerned about the software that you use as I am concerned with making sure that you have a habit of updating your books regularly, at least every quarter, if you're not doing it every month. And when I ask for your year-to-date financials, you can easily just send it to me without having to prepare. This means that if you're on this call and you do not have your January through October financials ready, you're taking a big risk, because you can't even properly do year-end tax planning if you don't know the condition of how your business has performed. So softwares, yes, QuickBooks, but if it's not going to work using QuickBooks, or you think it's going to be complicated, good old Excel, as long as you're doing it regularly, that works. All righty. I think that's it, guys.
Oh, that was good. Anybody have any last minute questions? Ebere has 1 more minute left. I mean, she did an awesome bang up job. So
Yeah, I think I have just one. I'm sorry, Stanley. Just one question regarding the note. So if my entity is set up in Nevada, I did a foreign file in New York, but I have a note in Wisconsin, should I be foreign filing in Wisconsin as well?
Yeah, so the question is, I've learned just to respect people for the decisions they made, but I'm not a fan of the Nevada, Wyoming, Delaware, Mars, Jupiter. Again, where you're doing business is what matters. So if you look at it, and that's exactly what we explain when we talk about the Nevada and Wyoming. What I tell my clients is, you can farm in Nevada and Wyoming all day long. At the end of the day, you're still going to have to register that entity where you're doing business. And if you're doing business in Wisconsin, and then you're also doing business in New York, you still have to end up
you just froze.
registering it in Wisconsin and New York. So the question is, why did it go to Nevada in the first place? Except to incur you an extra $650 that you got to pay every year annual fees. So now you have 3 places. So now it comes back to when I was talking about one of compliance costs. So it really defeats, because most of the people that tout Nevada are saying, okay, do Nevada because, asset protection, privacy, and all that. You can get that with a regular LLC if it's set up right in the state where you're doing business. But now you do need to have it in Wisconsin if you have a note in Wisconsin. So now you're going to have 3 states you have to comply with, and three states tax filing. I mean, Nevada doesn't have tax filing, so that's fine. But you're now going to have 2 states where you have to file taxes.
Got it. Okay, thank you.
All right. I think that's it. Ebere, thank you so much for this wealth of information. I am always excited, and I will get my documents filled out so I can do my year-end planning.
All
I know
right.
I owe that and all that kind of stuff, but I will get that. James, I know you with me too, so I don't feel that bad.
Can I ask one last question?
Go ahead, Stan.
Sure.
You know, in light of where the country is, you know, I guess with all that's going on, do you believe that the IRS will be extra scrutinous in the when people file, that they'll be, or will they be a bit more kind of just going?
I don't know, but what I can tell you is that identity theft has been on the rise. IRS is also overwhelmed with returning back to work, so they're making a lot of mistakes and sending out a lot of unnecessary notices. Even for us, we've also been under a tremendous amount of pressure just being a CPA firm in this environment. So what they're going to be looking at and scrutinizing, I don't know. I just know that everybody is just under an extreme amount of pressure. And so if there's an extreme amount of pressure, they know that people potentially could make more mistakes now than later. So they may be looking more, but they just may not even have the bandwidth. Just dealing with the whole identity theft scam has been a huge issue for them this year, that they may not be even having time for audits. I have a client that is under audit for their for their trust. And I think they're going to do well with the audit. It's not a big deal, but we can't even get to the point of finalizing the document request because this is now the fourth auditor that has been audit has been reassigned to a fourth auditor just in a space of 9 months. That can tell you how much of a struggle that they're having. So they may not even be focusing or paying attention because they're also very distracted. And you know, when the government shuts down, then they have to shut down. They can't do as much. That's the extent. But just talking in general, I know people are kind of like worried, concerned. That's when you now start to look at the inner healing, inner self, and not be worried. I had a fast Facebook the last 3 days, and I realized that I was addicted on Facebook off, and it was too much, you know. So you have to protect your mind. I know that a lot of crazy things are going on out there, but we're still responsible for what we allow in our mind. So sometimes listening to the news and all that can be a little overwhelming. Just you know, be in solitude, turn things off for a while, and just breathe a little bit, and just keep it moving.
I had the same thought that Stanley had, because people are like running scams and getting all this money from you know, grants and so forth for businesses they created. And I was wondering myself, how are they going to check all of this? And everybody's getting this unemployment and all this stuff. So I was wondering the same thing. How are they going to follow up on this stuff?
Yeah, they may not, like, if they go ahead and forgive everything under 150. I know some clients who got money for 3 of their businesses and they shouldn't have. I mean, I told them, if you got audited, this is good. But if they forgive everything, and that's what happens when people are under pressure, you tend to make mistakes. There's the way that the PPP look. I personally feel that the same exact way that the rebates were handled, it was based on what you filed in 2018 or 2019. They should have just looked at business tax returns. If you had income during the year, we're going to give you, you know, because basically what they did, the PPP loan really just gave you back all of your self-employment tax, you know, so that 2.5 months really represents 15.3% your self-employment, 15.3% payroll taxes. So all they had to do was anybody who paid into payroll tax 2018, 2019, you just get that back. If they did that, it would have been easier, but nobody's thinking and everybody just acting irrationally. So some things we're just going to have to chunk it up. So this is what happens when you're under pressure.
I got money from the Small Business Administration, and they did it the way you said. I had to provide proof of income that my business generated last year. All the bank statements and so forth showing money coming in. So they kind of did it that way, the way you said. We'll see.
Mm-hmm. Yeah.
All right, guys, we're gonna let her go. We're above time. We're over time. Thank you guys so much for joining. We have new member orientation on the 18th. If you are a new member and did not attend new member orientation, please sign up for new member orientation on November 18th. We also have our roadmap on the 4th Tuesday, so make sure you're on there. I will be unveiling and giving demos of the new partnership programs that we have in play for that. So good night, God bless, and have a wonderful Thanksgiving. Talk to you soon. Bye-bye.